The big bank reporting their results about an hour ago. Let's get more on what these results mean for JPMorgan and also the banking industry as a whole with Bill Fitzpatrick. He's an analyst at Optique Capital Management, which owns shares of JPM. And Bill, good to have you back on the program.
Good morning. Thanks for having me.
Okay, so you just heard from Jason Tyler. He's comfortable if Jamie Dimon is comfortable with the reserves. How do you feel about that?
Very comfortable, but keep in mind they added another $1.5 billion to reserves. So we thought they were approaching a level where there was no more reserve buildup, and now I'm not quite convinced that's going to be the case. So yeah, $33 billion in reserves, JPMorgan is fine. But when you're looking out at the banking industry, and given the cautious outlook that we heard from Jamie Dimon today, it's hard to imagine why these bank stocks are rallying so aggressively year to date. We've seen regional bank stocks up 25–30%, and I think they're getting a little ahead of themselves.
Right. It tells you that the momentum that we thought is not going to accelerate as the way that we thought from 2009. And in fact, as you said, these reserves are pretty much going up. We had actually expected perhaps we may see a plateau or them going down at this point.
Yeah, that's exactly right. And given this is really a consumer franchise in JPMorgan, and the consumer credit losses are supposed to be front-end loaded, and very much, and they are. And yet they're still building aggressively reserves. So, to me, we are not at the end of the credit crisis here, and you've got to take a more cautious outlook. And to me, if you look out at the regional banks, a lot of them have commercial real estate, and we haven't even gotten to that point yet. So I think with better focus is on the more consumer-oriented banks like a Bank of America and JPMorgan. I think they're adequately reserved, and that's probably a better place to be right now.
Now, retail banking, which I know you said that you're quite excited about for JPM, the revenue was flat at $1 billion. What do you make of that?
Yeah, and the reason we like the retail banking is because if you think about it, look at the franchise here that JPMorgan has. You've got a failed bank in Washington Mutual. You've got Bank One, which was never run particularly well. You've got Chase Manhattan, which was never mistaken for Wells Fargo. You've got all kinds of opportunities to better run the bank, and that's really what Jamie Dimon and his management team's expertise is. This is not a growth at any cost type of franchise. It's operational excellence. So I just got to believe there's all kinds of different synergies and cost savings strategies, cross-selling opportunities that can develop in the retail bank, and I think that's going to be the driver of the stock here going forward. Okay,
and Bill, just one more question here, because another downer in this report might be these charge-offs that we saw in credit cards. Net charge-off rate was at 9.3%. That is up from 5.56. Could this perhaps be the reason why we're seeing the stock down in pre-market trade?
That's going to be one of the overhangs, and that is a legitimate concern, because keep in mind, this is a best-in-class credit card portfolio. Far higher quality than all the other investment banks out there. So that is alarming. You're going to want to dig a little deeper in there. I would expect some more outlook on the conference call. But I think you may be onto something there, that's maybe the overhang on the stock today.
Indeed. Okay, Bill, thanks for joining us. I appreciate it. Bill Fitzpatrick of Optique Capital Management.